What's up, tribe? So in this video, I'm going to show you how not to blow your Profem account. Also, how you can pass your Profems. This is the mathematics of trading or risk management rules. So you're going to get a mathematical formula at the end of this video that you can use to essentially not blow your Profems, because that's the most important thing. Not blowing your Profems. Then we can talk about making money from your Profems. If you don't blow your Profems, you're definitely going to actually make money, right? Because you already have a profitable system. So there's the mathematics of trading. I don't really have time to go deep into all of this. You can see expectancy formula, law of large numbers, margin of error, and there are many, right? But we're not going to touch on that now. Just want to talk about Profems. So there's the business of Profems, which I will do in the next video, talking about how you can make money consistently trading Profems. But this video is going to focus more on the risk management and how not to blow your Profems and how to mathematically sustain your accounts long enough, till you get paid. Okay, so now the problem I discover about traders is that most of them don't have a system. So like what I discover traders do is that they go get a mentorship, they learn a strategy, like for 1 month, and then they buy a Profem and then start trading the Profem and they blow the Profem. They have not done proper backtesting, getting data to know, okay, this is what my system is all about. They don't know the characteristics of what make up their system. So most traders, I can tell you for a fact, they don't have a system. They just have a trading technique, a trading strategy that they bought from a guru, for crazy amount of money, but they don't have a system. So now let's use this system as an example. So this system has a win rate of 50%, a risk to reward of 1.5, average risk percent is just 1%, and then the trade count is actually, I just put 50 there, right? But I can put any trade count, but I just decided to use 50 because I think on average in 4 months, I think most traders, especially day traders, we have a 50 trade count, right? Trade frequency. Okay, so now this system is actually profitable. Yes, it's actually profitable. To prove that to you, let us actually look at the results, because when I ran the simulation, I discovered that we were profitable. I ran the simulation multiple times, but I'm just going to pick just one sequence, because in trading, there are multiple sequences that happen in trading, but I'm just going to pick one sequence. So this is the one sequence that I got. All right. So the system did an 18.63%, right, in return, which is profitable. The profit factor is 1.7. If you know about profit factor, you know that this system is actually what? Profitable. We look at the max drawdown is 8.21%. Now, most profits will kick you out when you are close to this max drawdown. I think in Funded Next, which I'm going to review to you before the end of this video, Funded Next have, I think there's a plan where they have a max drawdown of 8%. So judging from this, you're already blowing your account. Now, this will come at any time. Now, this is just 50 trades. I'm going to use 50 trades, small sample size. You could actually blow your account or have an 8% drawdown within 7 trades, or sorry, within 10 trades, right? it mustn't even be 50 trades, because if you look at this, we're actually using what? 1% of our, sorry, we're actually using 1% of our account balance. So if you lose like, I don't know, if you lose like eight, you have 8 losses in a row, right? You've almost had like 8% drawdown, right? So now the system is profitable, but this is where we have problem with prop firms, 8.21% drawdown. Now, and this is where people don't like prop firms. They don't like prop firms because, I mean, you can actually have a profitable system, but it's difficult to pass a prop firm because there's no how you're not going to have this type of drawdown. But I'm going to show you how you can mathematically pass prop firms, even if you have a profitable system. This system looks kind of weak, but it's still profitable. It's still profitable. Right? It's one of the, I'll say, kind of one of the crazy systems, because the average win rate, I think, is around 40% or something like that. But let's see if this system is actually profitable. Okay. So that this is the profitability of this system. So it has an expectancy of 0.25 and edge, which is the same thing, 25%. So as you can see here, it's a positive expectancy. So it means that we're going to make money long term, if you understand the law of large numbers. So the more we use this system, the more profitable we're going to be. Right? So okay. So now the funny thing is that this system, you can never blow your account, but you can blow your profit, because if you look at the risk of ruin, the risk of ruin says 0.00%. So that means the more we trade the system, the more if you trade the system for a long period of time, you will never blow your account. You can't blow your account if you trade the system, but you will blow your profit. And this is why people don't like profits, right? They don't like profits because I can have a profitable system. I will not blow my account, but I'm going to blow a profit account. So it's like, how am I going to balance, balance this thing? How am I going to make money from profits? And I have a profitable system. And this is what makes people hate prop firms, call prop firms a scam. But I always tell people this: there's always a mathematics to it. Right? And so we're going to explore the mathematics of what? Of prop firms. So the problem or the issue of prop firms is when you're trading, you will encounter losses. And that is where people don't know how to handle losses. That's the issue of problems, because prop firms don't want you to have a drawdown, and drawdown is as a result of consecutive losses, losing streak. So now, if we explore the trade log, you can see that when we took the first trade here, we won the first trade, second trade, third trade. Now this could actually be different. Now maybe you could actually make you could actually make 3R on that single trade. You could actually make 0.5R, 1R. It depends, right? So this result is not that accurate, but I just want to show you the losing streak. Pay attention to this losing streak here. You can see this red here, right? Now, some persons are so delusional to think that because they bought a mentorship from one guru, one guru or Lamborghini, and he promises you this system that's, is going to make you so much amount of money. You're going to buy the same Lambo that he's bought, and you retire of your mom, and you be in an island, and you bought the system, you trade the system, and maybe you trade the system for a while, you pass your phase 1, and when you pass phase 1 or phase 2, and then immediately got funded, you started losing. That is just one sequence of simulation that I ran. There are multiple sequences, and this thing could actually change. It could actually change, and it could be very, very chaotic. All right? So I just had to pick the one that is the most brutal. Because sometimes you go win, lose, win, lose, win, 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 lose, lose, win, lose, win, lose, lose. So this is just the simulation of what a 50% win rate system with an average reward of 1.5. Okay. So let's look at this on the equity curve. Let me let's look at losing streak first of all. Okay, so for 50% win rate, the max loss that you could get for a 50% win rate system. Now, you have a 95% of having 4 losses in a row. Look at this here. 4 losses in a row. You have 95% of hitting 4 losses in a row. You have a 77% of hitting 5 losses in a row. You have a 51% chance of hitting 6 losses in a row. And this thing could actually be even more brutal. Why I say that is because you can have 5 losses in a row, 2 wins, and another 5 losses in a row. And that's the game of trading. That's the problem of trading. People think that there's no how I'll have 5 losses in a row, win 2, and then have another 5 losses in a row. Let me show you this. Look at this. This is 1, 2, 3, 4, 5, 6. 1 win and more losses. And this is where people lose their mind. I may be like, oh, I think I'm possessed. I think I can't figure it out. It's always me. Why me? You know? And those that do document their journey trading, they do, their sad videos and say, man, trading is not for me. I tried, I'm quitting, I just quit. I see those videos on YouTube, and it's like they feel that you can't have losses in trading. I don't understand the law of probability. And is I don't know who was their mentor who taught them that there's no how you can have losses in like 4 or 5 losses in a row. It's possible, right? So stop feeling depressed and doing all those depressing videos or vlog videos. So okay, now losing streaks. Okay. Now this is 50% rate. Now it says now for 50 trades, you have 6 losses in a row. Now your wolves can dance between 45, 50, 55, maybe even 60. So you can say you run the chance of having 7, 6, 5, 4 losses in a row because of what they call let me show mathematics of trading. Margin of error here. So in trading, what margin of error means is that in trading, the margin of error is about the uncertainty in your win rate and expectancy. Even if backtesting says your win rate is 60%, it might actually be 55% or 65% when applied in live trading. And some traders don't think this is possible. Oh, it can never happen to me. It can very much happen to you. You can have an 80% win rate and you're going to take up losses that is applied to a 65% win rate system or strategy, or win rates rather. Right? Managing your risk is the most important thing in trading. If you understand how probability plays out, and so that is not really about your human nature. It could just be the market, it could just be spread, it could just be. I don't have time to talk about randomness now because randomness is a different thing. It's another topic on its own. I'll show you how chaotic the market is. And you can have a fantastic strategy, but for a while it's not just going to work. It's not just going to work out. And that's just how chaotic the market is. But if you understand probability, you will beat many traders in the game. Knowledge eliminates fear. Knowledge eliminates fear. Once you have knowledge, all the fear you have in trading will be eliminated. You understand? It's how was the word to put it? it helps in clarity. Yeah? It helps in clarity. And once you gain clarity, fear is gone. The reason why most of you are scared is because you don't have knowledge. You're not aware. You don't have consciousness of your trading, of how trading works. Okay, so I don't have time to read about this, but let me just say, okay, why it matters. You never know the true rate after a small sample size of 20, 30 trades. You can see that. Now I use a small sample size, which is like 50 trades. Now, probability only settles after many trades. Many trades. Margin of error tells you how much wiggle room you have in your statistics. So there's the optimal sample size you need to use to solve for margin of error. I can't get into mathematics of trading, but maybe that'll be in the next video. Okay, so now let's go into the next thing. So now you understand now that you can have series of losses. So it is not, you cannot escape it. It is unavoidable. You're going to have series of losses. Depending, it doesn't matter what we raise, strategy or whatever, you're going to have losses. I can even pull up a system of 80%, which I'm going to see the minimum or the max losses for a 80% win rate strategy. Like for this one now, you can see 80%, you have 2 losses in a row. Now, because you have two losses in a row, consecutive losses in a row, when you take 50 trades, doesn't mean that you're not going to hit uh 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 drawdown, massive drawdown. You are going to hit massive drawdown. And some persons don't even know that they can have 85% win rate and they will still hit their max drawdown and they will still blow their account. It's not even about win rate. It's not about win rate. You understand? Because if you have an 80% win rate and you're using 2% of your account balance, you trust me, the day when this demon comes, you're going to blow your account. Okay? Now, so this is the simulation graph. So this is, maybe you're going to see this in your pro firms. Certain pro firms, they have this in their dashboard on their website for each individual account. So this is just a simulation, all right? Now, I just put this out from the simulation calculator that I was using. This is how it's going to look like. Now it looks like the account is not growing, but after 50 trades, the account made money. All right? The account made, the account made 18.63%. So now let's go straight how to pass profit mathematically. Okay. So what I've been able to discover, right, and I've been using for a long period of time, is this formula for passing programs. Now, the first thing you need to do is you need to know your max drawdown. Your max drawdown for your system. I also need to know the max drawdown of the profit that you're using. So we're going to take an example of this profit that I currently use, and I recommend you can use Funded Next, you can use FTM or whatever. But I think Funded Next has a juicy plan. So take for example, we are using a 6K account. So we're going to pay attention to the loss limit, the maximum loss limit. So they say that for you to blow this account or lose this account, you need to have like 10% drawdown, which is like $600. Right? Okay. Now you can look at other accounts, but I'm just going to use this 6K because that's what we have. That's what we have here. 6,000. That's what I use for this presentation, for this simulation. Okay. So 600, that is 10% of what 6 key. Okay, so now first you have to know your max drawdown. I have to know what the drawdown of the profits. But now we're going to use the drawdown of the profits because it doesn't matter what our drawdown is, but you need to know your drawdown at least. You have a 10% drawdown. You have a like how much drawdown you get for your system. All right. So they still need to have that data. This is the formula that I was given that I've been using. So essentially, the formula is drawdown times 1.3. Right? Drawdown times 1.3. Okay, so now what we're going to use now is like I said before, we're going to use the drawdown of the pro firm, and this is the formula. So the max drawdown, which is 10%, that is $600. We are going to use that. So we'll say $600. So it will be $600. All right, $600 times, okay, 600 times 1.3. And that would be what? I think that would be around 780 or something. Let me just do a quick check. So $600 times 1.3. Okay, 780. I'm correct. Okay. So now this is the max drawdown. Now the max drawdown is already higher than our max loss on funded next. So we have already blown our account using this logic already. But I'm going to show you how you can reduce your risk, right? And reducing your risk is not just using 0.1% and all of that. You see the reason why you need to reduce your risk. You can also be using 1%, right? But you need to leverage or take advantage of this formula, this mathematical formula. So sometimes you use 1%, sometimes you use 0.5%. And you need to know when to use 1%, when to use 0.5%. So now the problem about most traders is that they don't know when not to trade. So it's like your account is making higher highs in profits, and judging from what I've shown you guys before, there's going to be a time where your account would start doing something like this, right? So that is your strategy. That is probability. Now, on a long run, you're not going to lose your account. Your account will still make higher highs. But pro firms will short you out when your account is here. Right? Because this here is 10%. Right? So this is where pro firm is going to short you out. Because they don't want you to, they know that you're going to have 10% drawdown. They know. But because it's a business for them, and they know that some traders don't understand risk management and the mathematics of trading, so eventually they're going to blow their money and buy more pro firms. So they have to put that limit there. You understand? So what I'm going to show you is how to take advantage of this area here, because most of us, this is where we blow our money here. We don't know when not to trade. So the formula or the strategy for doing this is very simple. So anytime account, I'll say, so anytime, let me use a different. So anytime your account does this, it comes back to this 780, this max drawdown, right? So your account drops to 780 max drawdown here. This is what you do. You go on simulation. Yes, you go on simulation. No, some of you don't want to hear this, but this is the truth. You go on simulation, and you see the reason why you need to do that. So, what is the reason why you need to go on simulation? So this is 718. All right. What's the reason why you need to go on simulation? Because when you did your back testing, your account is not supposed to go below this 10%. Yeah. Now, why is it 10%? Because 10%, if we go back to Profirm trading, we use 1% of our account balance, or 1% gave us 10% drawdown, max drawdown. Yeah. So now, if we use 1% of our account balance, we are going to have 10% drawdown. So we're essentially going to blow our account. You understand? So I'm still going to tell you how to reduce this 780, because this 780 is beyond the Profirm threshold, which is 600. You're not supposed to lose 600. You're not supposed to have 10% drawdown. Okay? But let us just use, let me explain the strategy for you. Then we'll talk about how to reduce the max drawdown. So we are using the Profirm's drawdown. We're not using our own drawdown in this strategy. We're using the Profirm's drawdown. If you're trading on your own account, you can use your own drawdown. But this strategy now is applied to Profirm's drawdown because we're trading their account. Right? Okay, so anytime you hit that 780, you go into simulation mode. Now, the problem with most traders is they don't even know when to not trade. So once they hit the max drawdown, guess what? They think that they can recover the money, and this is what happens. They start trading, and then the account goes like this, goes like this, goes like this, and then it might most likely coming back in the future, right? Make higher highs. But this is where pro firms short you out. This is where pro firms short you out. Pro firms short you out around this area. So let me put this red. But some persons think that they need to fix their strategy. They need to consult their guru. They need to, work on themselves. Maybe use my psychology. I'm so messed up. They think that's the reason why they are in this massive drawdown. And then they go on this pursuit of trying to figure out what went wrong. Nothing went wrong. That is just probability. You're going to encounter this drawdown. So sometimes your max drawdown might extend to 20. It might extend not to 20, it might extend to maybe 12, 13% drawdown. But when it crosses that max drawdown, you don't go live, you go on simulation. So what this is telling you that this area, which is this area here, let me take this up here. Sorry, this is supposed to be blue. So this area It's telling you right here, this area is telling you that the environment for your system is not existing anymore. It's not existing. So this could maybe come up like this. I don't know. So this area, something is going on in this area. But the problem with most traders is that they will try to trade and recover their money here. They'll keep trading this, and the account will keep going down, and then prof firm shuts them out. So you trade simulation during this period. Right? So essentially, what prophets will see is what prophets will see. When okay, let's talk about when to go live before we talk about what prophet will see. Okay, so when do you go live? You will go live when your account retraces. So when your account from here retraces 30%. So that's when you go live. So you can say this is when you go live. So you go live here. 30%. So okay. Okay. So you go live here where your account retraces 30%. Let me include the 30% here. So 30%. Okay. That's where you go live. Now, what is 30% of this 780? Let's do a quick math. So I think it's 780 and 30%. That is 234. So if your account retraces 234, 234, you go what? You go live. You go live. Okay, so this is it. Now, this is what prophets will see. Prophets will essentially see this. What you see is that your account was making higher highs, higher highs, higher highs, higher highs, and then it made that max drawdown. Now we'll talk about how to reduce that max drawdown, but let's give you an example. It made that max drawdown. Now, when your account was supposed to come down, it did not go down, right? Because you were on simulation. So when you were on simulation, prophets did not see. So what they saw was that this period you were absent. So you were on simulation. Now, when your account retraces and start making higher highs, then you came in. So it's like this. Prophets are saying this. Try saying this. Try saying this. Now, when you start making lower lows, it dropped like this, and then you went simulation again, right? You went on simulation again. Sorry. So this is what prophets will see. So your account is just making higher highs. So anytime your account makes that max drawdown, you enter what? Simulation. Same thing here. You enter simulation. Simulation. So this should be simulation. This should be simulation as well. Yeah? Simulation. Now this is where you enter live. Here. You enter live here. So here is where you enter live. I don't know what this is doing the opposite of what I needed to do. So this will be green, live, simulation will be red. Okay. So prophets will not see the time when you're on simulation. So now some of you might be complaining that but you know, I won't be making money every single time. I need to be trading every single time. trading is more when to sit on your hands and not trade actually. It's not about making money. It's not about, because you say, okay, I want to make money. I want to make money every single week, every single month. I want to be making withdrawal. If you think that way, trust me, you're going to blow so many accounts. And we have all these gurus telling you that you need to buy several accounts. Yes, I recommend buying several accounts, but can you at least learn how to manage one? Learn how to manage one. Develop a good habit of managing one Profem account. It's not quite stressful managing 10 accounts. I don't know how people really do that, combining multiple accounts together. It's a cool thing to do, but at least know how to manage one. Because if you know have the skill of managing one, trust me, you can trade without problems. You can trade investors' money, and you'll not be scared of blowing investors' money. If you understand this logic. So now, this is just 780. This is too much. So there's a thing called how risk affects our trading. So now, if you're using 1%, your risk is less. So your drawdown will be less compared to somebody using 5% of their account balance, 6%, 7%, 8% of their account balance. So this is just showing you how risk, the rate of risk affects your drawdown. So the more risk you take, the more drawdown you will be in. So what should we do now? So what we're going to do now is, knowing that our system using 1% risk, we're going to have 10% drawdown, and 10%, and it is inevitable, it's unavoidable. We're going to have 10% drawdown because we have run the statistics. On average, we have 10% drawdown if you're using 1% risk. So what we're going to do now is, we can't change our system. It's not about changing strategy. It's not about changing mentor. So looking for that mentor that has the holy grail of profitability, or this strategy is going to change your life. If you implement this strategy on a profit, you're going to buy a Lamborghini. This is not about strategy. Pick one strategy and work with it. So now, we don't change your strategy, you just have to change the risk. So now you understand your strategy now. So what I want to do now is to change the risk itself. So we're going to reduce the risk to 0.5, which is 0.5% of 1%. So this formula is now going to change. So what is half of 0.5? All right. So when I did the back test, I discovered that the average max drawdown is 5%. So 5% is below the 10% drawdown which Profirms. So this is 10%. So this will blow our account if we lose 10%. Now, we don't really care about demands daily 5% and everything. I don't recommend you to lose more than 5% of your account balance. For me, I recommend you to always lose 2%, half of it, for your daily loss. But we care about this, because this is what blows our account. All right. So now, so we're going to change this formula. We're also going to change the variables, the numbers. So when I did the back test using, the simulation for 0.5%, I discovered that our max drawdown is 5% if we're going to use 0.5% of our account balance. So now, what is 5% of $6,000? So this is $6,000. What is 5%? So 5% is 300, right? Okay. So now we're going to change this now to 300. Sorry, this is supposed to be 300. So the formula says that we would times that 300 by 1.3. So that will give us what? I think that will give us around 390, if I'm not mistaken. So 300 times 1.3 will give us 390. I got that right. Okay. So that will give us 390. Okay. So now, this 390 is way below the 600 Profirms Profits maximum loss limit is way below that. So anytime we get to here, this is this area here, when we get to the max drawdown here, so anytime we get to 390, change the 780 to 390, we enter what? Simulation mode. Now, once our account retraces, what is the 30% of 390? I think it's around 117. So that will be around 117. So once our account makes 117, right? Once our account makes 117, we'll go what? Live. We will go what? Live. And we keep on doing this. All right. And this is what Profits will see. Our account is making higher highs. Once it drops to that 390, which is way below that 600. So we can never get to the Profits max loss limit. You understand me? So now once we get to 390, we'll do what? We would enter simulation, and then we would trade simulation. We will still be trading, we will still be documenting our trades, but it will be our simulation. And once we make 117, we go above that go above the 390 and make 117. 30%, we trade 30%, then we go what? We go live. We keep doing that. So what Profits will see is that our accounts will be making higher highs. Anytime that we lose like this, Profits will not see us. We're absent. Maybe we're absent for like 1 week. We're absent for like 2 weeks. And this is how you maintain your account. So if there's anything you don't understand, please send me a message. I will explain further. So this is all you need to know about Profit trading. If you follow this simple mathematics, you would not blow your Profit account. Trading is about knowing when not to trade. It's not about trading every single time, trying to make a certain percentage. It's know when not to trade. This is not even your money. This is somebody else's money. So that has already been taken away from you. So you don't really care. You don't really care about how long it takes to even make money, because you are using a low capital to purchase a huge capital. So that's a crazy amount of leverage. So if you use this, you would survive trading Profits. It doesn't really matter what strategy that you are using. Understand your strategy, understand your max drawdown, your max consecutive losses, and then you manage your risk. Yeah? So once it retraces 30%, then you start entering it on your Profits. So I hope that is quite understandable. If you have any questions, you can send me a question. My WhatsApp number is on the description, so you can send me a DM. You can also join our Telegram as well. Yeah, that's pretty much it. That's pretty much it. Any questions, drop it on this in the comments. In the comment section, I would answer you. So I'll see you guys on the next video. Peace.